I think the normal format is that you will get a presentation first from the Assistant Governor, Mr. Siriwardana, and then we'll be happy to field some questions. Okay.
Thank you, Governor. Good morning. We have a brief presentation about the recent economic developments and the basis for the review of the monetary policy stance for July 2016. To start with the global environment, you already know the UK vote for the Brexit. It was a kind of a shock to the financial markets, and since then I think it's still being unfolding. But we have latest World Economic Outlook update by the IMF, which has basically reduced the expected economic growth in the United Kingdom, particularly in 2016 by 0.2 and 2017 more importantly by about 0.9%. That's the major significant change that we see in the World Economic Outlook update. But you can see the emerging market economies are expected to be, their growth expected to be relatively stable compared to the previous estimates that they made in April this year. To start with the domestic conditions, the economic growth, you already know, we have a first quarter GDP growth which was 5.5%, supported mainly by the services as well as particularly the industry sector. There we had 5.5. You can compare with the 4.4% growth that was there in the previous year. And we see going forward, particularly the latest indicators of the economy. You can see by looking at some of the key indicators, leading indicators in the services and industry sector particularly, provide the conclusion that the growth momentum is continuing in the economy. For example, tourist arrivals has increased, the container handling has increased, the cargo handling particularly about 12% increase, and also the services sector purchasing managers index has also performed well. And in the industrial sector also, electricity generation, the cement availability particularly about 12% growth is there. And investment good imports, about almost 20% increase has been there. But in the agriculture sector, we see some deceleration. For example, the tea production has declined by about 11% in January to May period. And also the rubber production also about 4.2% growth has been there. But overall, we see that the economic growth momentum is continuing in the economy. And in the external sector, we have latest updated numbers up to May. We have seen import expenditure has increased marginally in May, while export earnings has decreased. You can see the import increase is about 0.3%, now about 1.6 billion. And in cumulative basis, you can see about 7.6 billion has been there. And again, it reflects a kind of a decline, about 2.8% during the first 5 months period. And export earnings, there was a 12% decline in May, but on cumulative basis also, it has decreased by about 6%. And the trade deficit in May has increased by about 16%. On the cumulative basis also, you can see it has increased by about 1.4% during the first 5 months period. And tourist arrivals as well as the touring earnings are continuing their positive trend. We see in June there was about 2.2% increases there following the normal trend. And cumulative basis during the first 6 months we saw about 16% growth. And earning from tourism also, it has reached about 1.6 billion compared to 2.9 billion we got for the whole year last year. And worker remittances also continuing its increasing trend, which was about 2.4% recorded in June. And on cumulative basis also we have seen about 5.3% growth to 3.6 billion so far during the first half of this year. So this indicates it would increase more than what we got last year. It was something like 6.9 billion, and this will kind of an indication that we will be able to surpass 7 billion remittances this year. And when it comes to the exchange rate, it has depreciated by 1.2% so far this year against the about 9% depreciation that we had last year. And you can see the government securities market, we saw some outflows until, I think, April this year. But since then, it has reversed. We see inflows coming into the market, and we still see continuation of these outflows in the Colombo Stock Exchange, which was something like, I think, 32 million. And gross official reserve position, it's in fact, it was by end June about 5.3 billion, but latest numbers indicate it's 6.4 billion by the last week of July. It's 6.4 billion. And Sri Lanka completed successfully the 10th issuance of the international sovereign bond at a lower yield rate, which indicates the continued investor confidence on Sri Lanka and positive sentiments of the economic outlook of the country. And in the fiscal sector, we have tentative numbers. Based on these numbers, we have observed government revenue has improved from around 4.6% to about 5% of GDP during the first 5 months. And more importantly, total expenditure and net lending during the first 5 months has maintained almost unchanged at 7.2%. Consequently, the total budget deficit during the first 5 months has declined from 2.7% in the previous year to 2.3% during the first 5 months of this year. And moving into the monetary sector, we have market interest rates adjustment. We have seen upward adjustment has basically continued responding to the monetary tightening policies adopted by the central bank in early this year. You can see lending rates, deposit rates have continued their upward trend, particularly reflecting the gradual transmission of the increased short-term interest rates to retail interest rates. And yields on government securities market, you can see it in fact increased during the first 5 months, but thereafter we see a stabilization in the treasury bill interest rates particularly. And moving into the credit granted to the private sector by commercial bank, we still see this relatively significant increase that we saw in April, which was, I think, about 21%, but there's a marginal decline to 28. In fact, in May, but you can see overall monetary growth has some deceleration from 8.2% in April to 16.5% in May. But as I indicated, we still see the continuation of the credit to the private sector, which was almost 28%. But we have June numbers as well. Based on the provisional June numbers, we still see that increase in trend is continuing. Particularly, this growth in the overall monetary numbers has come from the significant increase in the net domestic assets. Mainly led by the private sector credit growth, but we have seen some deceleration in the net credit to the government, particularly during the May, and also we have seen a decline in the credit granted to public corporations, particularly in May, which has declined by about 22 billion, which was a result of the repayments made by the public corporations, particularly the Ceylon Petroleum Corporation. And moving into the inflation, we have seen both the headline as well as the core inflation still continuing the increasing trend. You can see headline inflation was based on CCPI. It was year-on-year basis 6%, and also based on the National Consumer Price Index, also it was 6.4%. And more importantly, the core inflation, you can see the increasing trend in the core inflation is still continuing, which was based on the Colombo Consumer Price Index 6.4%, and based on the National Consumer Price Index, it was 7.5% by June this year. So this gradual increase, particularly in the core inflation over the past few months, reflects the rise in demand-driven inflationary pressures in the economy. And the Monetary Board, after considering these developments, as you saw last evening, decided to revise the policy interest rate. Particularly, Monetary Board considers that the further tightening of monetary policy is required to, particularly to curb the excessive demand in order to preempt the escalation of inflation pressures. The tightening of monetary policy will ensure the maintenance of inflation at mid-single digits in the medium term, which is supportive of the growth momentum of the economy. So the adjustment is not expected to have significant impact on the long end of the yield curve, particularly government securities. And as a result, you can see the policy rates were increased by 50 basis points to 7%, as well as that is standing deposit facility rate, and also the standing lending facility rate was increased to 8.5%, and at the same time, the SRR was remained unchanged. Thank you.
Any questions that you want to ask?
Avana, at the very beginning of this month, you said that you were quite happy with your monetary policy stance.
Correct.
But there appears to be a sudden shift yesterday. Is it due to IMF pressure or?
I certainly hope not. But I'm going to take refuge in a quote from John Maynard Keynes, who said that, when the facts change, I change my mind. So what are the facts that have changed since I spoke to you last? One is that as Mr. Siriwardena pointed out, I thought that as the monetary policy transmission took place, we would see some easing of private sector credit. That has not happened. That continues to be buoyant, and it's higher than the desirable levels at the moment. That's one fact. The second fact is that the framework for this year, the macroeconomic framework for this year, which was to deliver 5% growth with inflation in the mid-single digits, say 5%, and a stable balance of payments, assumed that there would be a 2% of GDP contraction in the budget deficit. Now, in the first 6 months of the year, the fiscal performance was very good. As you saw, Mr. Siriwardena gave you the numbers, and the government was able to hit its targets. But the delays that have been caused by some of the court cases relating to the VAT adjustments has meant that there could be some disruption to revenue collection. The bill is going to be presented in Parliament on the 11th of August, and it, all things being well, it will move through, and we might be able to catch up on the revenue, and obviously the central bank will take that into account. But when there is a slippage or there's a possibility of a slippage in fiscal policy, clearly monetary policy has to lean against that. So this persistence of the high credit growth to the private sector, plus some uncertainty about revenue collection on the fiscal side, which should go away on the 11th of August, but it will take a few months to make up for that. So we want to really have a framework of policy making where we are forward-looking. So we see some possibility of slippage on the fiscal side and this persistence of credit growth. So we felt that we needed to take some action. And we also thought we had some room to maneuver in doing so, because growth impulses are fairly strong. Again, as you saw in the presentation, a number of the proxies for growth are pretty robust. So I think the Monetary Board concluded that we could hit the growth target of 5% or maybe even achieve a bit more, even after this 50 basis point adjustment in interest rates. So really the difference is the persistence of credit growth, particularly to the private sector, which was creating demand pressure, which we were seeing in the rising inflation as well. Of course, the rise in inflation was, as you saw in the statement, partly due to demand side pressure, as well as supply disruption to weather as well as the tax adjustments, VAT adjustments. But we thought there was a more demand pressure than we wanted. We thought that could be fueled by this delay in the VAT. So we thought we needed to act early and decisively. You know, what we'd like people to do is to think of the central bank like they think of the doctor, their doctor. That it's what patients want of their doctor is to diagnose early and treat early, because then the treatment is pretty mild. If you allow it to delay, then you have to have a major operation at the end. So we want to be more forward-looking in our policy making, and because we saw some of these issues emerging, we thought we should move early. And of course we can recalibrate depending on how things pan out.
Governor, you said you haven't achieved the desired credit growth. What is the desired credit growth that you are looking at? I mean, in a sense, it's more than the desired credit growth.
I will give you an answer, and I'll also get Dr. Veerasinghe to talk more about this. I mean, I think if it's around 20%, would be okay, but maybe you want to expand a bit on that here.
What we basically looking at, not only the private sector credits, overall monetary expansion, what we measure in terms of M2B, which is now growing around 16.5, for us to reach about 5 to 5.5 real growth plus inflation around 5%, we think overall monetary expansion 12-13% would be sufficient. Still, it's high. So that's where, if that is coming from either slowing down private sector credit or slowing down the government credit, whatever the way, that is a combination of composition of overall monetary expansion. That's why we are looking at. That's why, as Governor mentioned, we were expecting deceleration, and also we still expect that to decelerate further by the end of the year, so that we have a right balance between growth and inflation.
Government's debt servicing cost to the central bank in lieu of selling treasury bills to the central bank.
You mean the stock of...
I'm not talking of the stock. Stock is about 250 billion rupees. The debt servicing cost of the government.
That stock? How much you know?
Debt servicing cost, obviously, if you look at our treasury bill holdings, from the central bank point of view, it's an income, and we generate a profit out of it. But I don't say that is a good thing. So, what we are doing in terms of monetary operation, our holdings are mainly for the purpose of managing liquidity on the day-to-day basis.
Correct, Doctor. Now, for 6 months of this year, what was the government's debt servicing cost to the central bank?
There's no cost to the, all government debt servicing is a cost to the government. There's no cost to the central bank. We are only selling.
That's why I say, what's the government's debt servicing cost to the central bank?
What do you mean by cost to the central bank?
For example, $250 billion is your treasury bill holding due to government borrowings. Forget about the reverse repos. So what is the interest cost that the government has to pay to the central bank?
The government has to pay. So
precisely.
Yeah.
Aanduwata gewanna thiyena interest එක කීයද governor?
No, I mean 250 billion.
Yeah.
If that was not issued central bank, it would have been issued to someone else. There's no difference between the cost to the government, whether it's held by the central bank or held by someone else. So there's no additional cost to the government by selling treasury bills, either to the government or to the private sector.
Governor, you said Sri Lanka can achieve 5% or bit more growth despite the policy rate hike yesterday. But the original target is somewhere around 5.8 to 6%. Does that mean you are revising down the growth target this year?
The target, no.
No, that 5.8% number actually came last year with the budget. And also before 2015, every year we make a projection about, what we think the economy can grow in the next 12 months or medium term. That obviously always revised based on the external conditions as well as domestic conditions. As we have seen, IMF has revised it now 3-4 times during the year. Likewise, we also, every time we assess the outlook and the conditions and we revise it. What the latest one, I think, as far as we can remember, last time we were talking about growth of 5 to 5.5% for 2015 in the latest Monetary Policy Review and some of the publications. And we still believe we can reach that range, looking at the early indicators. If that is not the case, I think then obviously we have tools to deal with that. So that's the number. There's no specific number that we are basically fixing. Especially when it comes to projections, it's always a dynamic thing, and would be revised based on according to changing circumstances of the outlook.
By the end of this year, how much do you expect your treasury bill holdings to be? What is your target for your, now currently it's about $250 billion, rupees, sorry.
No, there's no treasury bill holdings. It's not a target. It's an outcome of monetary policy operations. So what we target is to have overall monetary expansion in line with what we think.
So by the end of the year, what is?
By the end of the monetary overall broad money expansion, what we think in line with the growth and inflation could be around 12 to 13%. So for us to achieve that, what would be the civil holding depending on what is our foreign exchange operations, how much we build up reserves, or what is our domestic operations in terms of managing liquidity. That is the outcome of our monetary operation is not a target.
Exactly.
Governor, one more. Governor, we see a little divergent in the remarks that you made at the beginning of the month with regard to the monetary policy, where you said clearly that you wanted to wait till the monetary policy actions that you took at the beginning of the year, the SRR hike and the 50 basis points hike in February to take effect. And you also said that generally it takes about 12 to 18 months, and we have another 9 to 10 months to see the full effects. So did yesterday's 50 basis point hike triggered predominantly based on the delayed impact, to arrest the delayed impact of VAT?
To the reason, for sure. To make sure that in case there is any slippage on the fiscal side, we don't know that there will be, but the Monetary Board took a forward-looking approach that if there is slippage, to lean against that by tightening monetary policy. It's a question of having good, monetary fiscal coordination. But also there were some demand-side pressures. This seemed to be persisting, which there was some concern about as well, as reflected in the inflation trends and the balance of payments trends. So it was a mix of the demand-side developments that we have seen, plus possible anticipated excess demand through fiscal operations. Yeah, please.
If I may add one more thing, say when we take a monetary policy action at any point of time, that does not mean that we will wait until the full impact of that is transmitted to the economy and see to take the next action. So we expect a certain path of variables moving. If we think that is deviating from the expected path, then obviously we take another action. That's basically the proactive monetary policy, rather than waiting, as Governor said, a forward-looking approach of the implementing monetary policy.
That's the kind of slight cultural change we'd like to cultivate, is to try to be more proactive going forward, if possible.
Adding to that, Governor, I mean, what is the expected level of private credit growth by the end of this year? Because I don't think that you wanted to totally crush the demand for private credit, because we have seen in 2012 cycle also it took 18 to 24 months to rebound.
Yeah. No, if we can get it down to around 20% by the end of the year, that I think would be a good outcome.
Governor, in your statement you say the tightening is also to support the balance of payment at the moment. How serious is the balance of payment issue at the moment?
I wouldn't say it's very serious, but really, if it was really the kind of a combination of macroeconomic developments that led to this outcome. So if you take the pressure on the inflation side, plus, for the first time in many months, imports went up, and exports are not doing anything like as well as we would like them to. So if you look at the balance of payments on their own, the outcome, you can see a declining trend in terms of the trade balance at least, though the services account is doing quite well and is offsetting it. So there is no major pressure on the balance of payments. But if you take everything together in terms of the trends in terms of inflation, the trends in terms of the balance of payments, and possible concerns on the fiscal front, you take all that together, then the Monetary Board had some concerns about aggregate demand developments.
So, do you see kind of a fiscal slippage with delay in revenue collection?
We don't know. We don't know. I mean, clearly, it seems this month there has been some impact. And the bill is being presented in Parliament in August. So there may well be catch-up in the last 3 months of the year, in which case we can take that into account going forward. But we don't want to wait till the horse has bolted. We don't want, if there is a problem, and we'd prefer to be proactive in terms of possible negative outcomes on the fiscal side, because there is uncertainty. It just goes, why don't you explain? Yeah.
Sovereign bond process still government is keeping in their dollar account, no, not so far.
The bond auction
Governor,
has been announced.
Vehicle registrations and vehicle, it was a high of about 14,000 in September. If I'm not mistaken, it dropped to about 3,000 odd. How do you see this in the context of policy on, because either we did something right for it to come down, or maybe we did something wrong before for it to go up so high, and how would you relate it to sort of a trade deficit?
I'll get the Deputy Governor also to comment on it. Clearly, the increase in consumption imports that we saw last year was unsustainable. And vehicle imports were a significant component of that deteriorating trend. And the excess demand that was created through the policy framework at that time would have contributed to that. But since then, remedial action has been taken now over several months. The loan-to-value ratio has been changed, and there was earlier monetary tightening, and there was, before this year, currency depreciation as well, and the import duty changes. So clearly, there was a policy misalignment, and a number of remedial measures have been taken, and I think we're now in a better place as far as vehicle imports are concerned. Do you want to?
Governor, 3 weeks before, when you took over and at the press conference, you said that the credit growth is declining and there's no need to change the existing monetary policy. So what made change during last 3 weeks due to risks?
Okay. I think people are coming in at different times, so let me answer it for the third time. I must go back because I have this great admiration for Keynes, so let me say this again. Before you came, I said, Lord Keynes said that when the facts change, I change my mind. So, and I said that the two changes in the facts were the persistence in the private sector credit growth. I thought that with the pass-through of the measures taken, monetary policy measures taken at the beginning in January and February, the SRR and the interest rate hike at that time, would be transmitted through the system, and there would be some decline in private sector credit. That did not happen. Over the last month, it has been persistently high. And then the other factor was the uncertainty on the fiscal side, because a major part of the macroeconomic framework, the stabilization framework for this year, was a 2% of GDP decline in the budget deficit. Now, because of these court cases related to VAT, there are some delays, and that has created some uncertainty about the fiscal adjustment side. Now, there could be catch-up, because the bill is going to Parliament on the 11th of August, and they may catch up. But I think we needed to be proactive and to take action to ensure that that if there is any slippage on the fiscal side, that monetary policy was leaning against that. But that's not the only thing. As I said, there are other developments, both in terms of inflation and the balance of payments, that are indicating that there is some excess demand in the system that needs treating. So there is no one thing as such, if you see what I mean. It's what's happening on inflation, what's happening on the balance of payments, and the possibility of fiscal slippage. And while growth still seems quite robust. Now, if growth was very weak, then we would have thought twice about doing this. But the fact that growth, that the best judgment at this point is that we can meet the growth target even with this 50 basis point interest rate increase, encouraged us to do so because of the concerns we have in terms of excess demand affecting inflation, balance of payments, and this question mark which has emerged over the fiscal outcome.
Dr. Veerasinghe.
Other taxes also, like ESC and NBT and all those things.
Now, on the central bank side, we this is outside, you're now taking me outside my pay grade to get to these things, but you want to say something?
It's, despite all these delays in legislation of these new taxes, one positive development what we see so far, even within the existing tax structure, revenue has been growing significantly compared to last year, as you saw in the presentation. I think that is an indication of even without some of the increases in tax rates or revising those rates, the other efforts put up by the Minister of Finance and the revenue departments are basically working, and more people are coming into TaxNet and strengthening the tax administration and collection. That we have clearly seen. With that, with new measures coming in, I'm sure that would be very positive in terms of fiscal consolidation.
The first 6 months, I think you would have seen the revenue, on the revenue side, the targets were met, and the fiscal outcome for the first 6 months was good. The first half, I think, clearly was not as good as it should have been, but there is a pipeline which will come through in the second half, I think.
Governor, on the sovereign bond issue, we saw a well-timed sovereign bond issue recently of 1.5 billion. But 1.2 billion, there was debt repayments, foreign debt repayments of 1.2 billion during the months of July and August, which is coming up. And again, another 3.6 billion repayment is coming up during September 2016 and May 2017. So given that context, I mean, how tough the situation is, how challenging the situation is. I think I can remember I asked the same question at the beginning of the month also from you, because given the level of debt repayments, how deteriorating the balance of payments and the foreign reserves and the external front. And what is the way forward for foreign fundraising in terms of borrowing, especially from the capital markets?
I mean, that's a good question. Just to make it clear, the government has raised 1.5 billion plus another 300 million in terms of syndicated loan, or 1.8 billion so far this year. So this money we purchase or we keep in our official reserves. are used to service only government debt service payments, which is not as much as high that the numbers that you are talking about. So what you are looking at is total external liabilities, including the private sector, the banking sector, and also some of the the outstanding government treasury bills and bonds and currency swaps. So those all are not supposed to be funded through that what we raised 1.8 billion. That is our obligations from the central bank reserves is to service government debt service payments for the whole year, which is around 2.4 billion this year. We have already paid more than half of that. So the liability or the commitments from the official reserves is only about, I think, 1.1 billion for the balance period of this year, for next 6 months. So that, which means we have already raised 1.8 billion. That's what we expect, at least reserve levels, official reserves. So we will be able to maintain at least same level as we had last year. That is kind of target that for this year. All the other, whatever the liabilities that are pending or maturing are basically commercial bank swaps that can be rolled over, SLDBs that can be rolled over, and then government's treasury bills and bonds market. Now we are not seeing the outflow, it's basically now coming back. So that's why we are not too much concerned about the, how to finance the overall country's external finances is different to how we finance the government external financing. That's the two different things.
Can I just add, if I can add quickly and then come to you. You know, at a broad level, in responding to your question, clearly over the next 3, 4, 5 years, we're going to have to access capital markets to help us meet our debt obligations. And that's one of the reasons why we want to have this proactive approach to policy making within the central bank, because if we can establish credibility around our policy making, that would give us better access to capital markets. So we are very keen, to establish this track record of being proactive and making policy which is designed to maintain stable macroeconomic conditions, because we are aware that we will have to access capital markets in the next 4, 5, 6 years. We're going to have to go and borrow. And to get the best possible terms, we need to have credibility around our macroeconomic policy making.
Last, Doctor, you must have already taken into consideration the foreign fund inflows into the government securities market also when you when you took the decision to hike the rates by 50 basis points.
That's, I think, already settled before we, may make this decision. If you can see April and May, that investor confidence by foreign holding of treasury bills, the foreign investors, had already enhanced. Especially, I think one of the reasons is the IMF endorsement of government policies. From that point, they turn around and now is on net basis, basically, it has already happened. Obviously, this also will give more confidence, and then we would expect that there won't be significant capital flight in terms of what we are holding by the foreign investors in terms of government securities.
See, I think it's also useful because it seems the U.S. data is getting stronger, and there may well be at least one increase in U.S. interest rates. So this, again, this proactive move will help us on that front as well.
The upcoming bond auction, only about 60 billion has been announced. I think there's about 100 billion maturing. What is the thinking there?
Sorry, what was the question? Go on.
This is based on government cash flow requirements. I think most probably today Mr. Samasri is not here. Usually now, because governments keep in their dollar proceeds to service this government, the external debt service payments, I guess the requirement of raising new money may be lower, and also with increasing revenues, I think they are managing their cash flows better. That may be the reason why. I'm not quite sure. I think no one from the SPD also here. It's basically the discussion between the Treasury and our public debt people are assessing what's exactly the need for the government cash flow requirement during a period of 30 days. So it may be they may not need to roll over all maturing, and then they usually raise whatever they need to meet the short-term, cash deficit to finance the budget deficit.
this
One more question only, please. I need to get to another meeting. Yes.
අධිපතිතුමා මේ ප්‍රශ්නයක් අහන්න කැමතියි. රටේ ගෙවීම් සහ පියවීම් පද්ධතියට වග කියන්නේ ශ්‍රී ලංකා මහ බැංකුව. ගන්න විදියට මහ බැංකුව ගෙවීම් පියවීම් පද්ධතියට වගකිව යුතු වුවත් ඊට පරිබාහිරව ICTA ආයතනය ශ්‍රී ලංකා තොරතුරු හා සංනිවේදන තාක්ෂණ නියෝජිත ආයතනය සඳහා වෙනම ගෙවීම් පද්ධතියක් National Payment Platform කියලා NPP කියලා වෙනම ගෙවීම් පද්ධතියක් ඇති කර ගැනීම සඳහා ඒ ආයතනය විසින් යම්කිසි රජයේ අමාත්‍යවරයෙක් කරා කැබිනට් පත්‍රිකාවක් ඉදිරිපත් කළා තියෙනවා අමාත්‍ය මණ්ඩලයට. ඒතර එහෙම වුණොත් මහා බැංකුවේ අනුදැනුමකින් තොරව එහෙම ගෙවීම් කිරීම සඳහා වෙනම පද්ධතියක් ඇති කරගත්තොත් ඒ සම්බන්ධයෙන් මහා බැංකුවට වග කියන්න පුළුවන් දේ ගෙවීම් කටයුතු වල යම්කිසි ප්‍රශ්නයක් වුණොත් නමුත් ඒගොල්ලෝ නිවේදනය කියලා තියෙන්නේ මහා බැංකුවෙත් උපදෙස් අනුව තමයි මේක කරන්න කියලා. ඒක ඇත්තද කියලාත් අපි දැනගන්න කැමතියි.
දැනට තියෙන විදිහට මට තේරෙන්නේ මම ඉංග්‍රීසියෙන් කියන්නම්. ICT agency, central bank, both the agencies are going to be working very closely together on this matter. The act related to the payment system, the law devolves considerable responsibility on the central bank. Central bank is responsible to ensure that there is security and stability in any payment system. So the ICTA agency has been doing some work, as you know, on another system. What has happened now is that Deputy Governor Samarasiri and the ICTA agency will convene meetings of all stakeholders to ensure that we have a system which is stable and which has security, and the central bank will be integrally involved in taking this initiative forward. But okay. Yeah. I'm sorry, I'm going to have to run. I've got to get to another place. Thank you all very much. Thank you.